Welcome to Subramani. Please subscribe, please hit the bell icon so that you can get the videos as soon as I put it. Anyway, I put 2 a day, so I was just looking at the evidence that we have of what has happened to standard of living of the people who have invested over long periods of time. Or even I remember things from the 1970s, and I realized that everybody around us has increased their economic prosperity. Everybody has moved from a 1 BHK to a 4 BHK, or everybody has bought a car or a bigger car, have taken vacations, have taken foreign vacations, and that is the evidence which is available. But the fear is, if the market goes down 5% in a day or 10% in a day, 10% is too high because you don't see that really happening. You don't see a 62,000 market going down by 6,000, which is the limit. But even if it goes down by 800 points or 700 points, there is enough panic in the market, because unfortunately the market thinks that or rather people, the investors think that the market owes them a living, and that every year you should get 18% return or 24% return or things like that. Unfortunately, that does not happen. But still, over a long period of time, you have so many companies which have not performed well for 3 years or 4 years. You take HDFC Bank, it will still be a big multi-bagger over a long period of time, but could have 3 years of underperformance. So then you say, oh, this company is not performing, so should I sell it? Or that the market is going nowhere, should I sell it? Or saying, oh, the market is falling, now that the small cap and mid cap are falling, should I shift to large cap? Maybe you should. Maybe you're not expecting this fall, but is there any evidence that it will be like that? For example, I was going through the statistics of the Indian economy, state-wise, and it is amazing things which have happened. For example, UP last year attracted 28 crore visitors, right, which is 4x of what Goa got, and Goa is supposed to be a tourist destination. So things are happening, things are changing, so many new airports, so many new roads all over the country. Wherever you go, people are complaining about petrol prices being high, but everybody is buying an SUV, right? That's the evidence. But what happens is, suddenly if you hear that the market is down, or that one company has completely fallen, then you say, oh God, market is so risky. But I don't think you need to worry about all those things, as long as you know how to pick the right stocks, or you have the skill of picking the right fund managers, the right schemes, or you have an advisor who is telling you all that and how to do it, or you have one large person whom you can ask before you buy a share. Your life will do well. In an economy which grows at 8 or 9%, all you need to be there, do your SIPs, do your lump sums, whatever you have, or however confident you are, and just keep putting money maybe in a flexi cap fund, or if you're not so confident, in a balance advantage fund. Let the fund manager decide when he should be in equity or when he should be in debt, right? So you have products like BAF which are available, product like multi-assets which are available, which will put some money in equity, some in gold, some in value, maybe some in foreign equity, some in debt, right? This combination is tax efficient also, and in the long run you will make money. But the problem is, if you let fear attack you, then you are very likely to panic at the wrong times. For example, the US went through world wars, it went through recessions, we saw 2008. Similarly, India lost at least 2 prime ministers to assassination, not to other prime ministers who escaped it, right? And we saw wars with Pakistan, we saw one war with China, we see a continuous war on the borders. With all this, we saw a lot of migration, we saw people protesting against elections, right? We saw all this, and still over the years we did very smooth power transfers. There's no doubt about that. Indian elections are some of the best, because you do power transfer without any violence, and we are a young democracy that way. So there is enough evidence to see. You take the evidence of the death of children at childbirth, right? So that has definitely halved, at least over the last 20 years. Maybe even better performance. The health index has improved, the education levels have improved. Some of our states have already gone to below 2% in terms of population control. We're doing a fantastic job of population control. We are building infrastructure. Our digital infrastructure is awesome. So all this is evidence staring at you in your face, but still some change in the market, some movement, and then people panic. And I also can tell you why people panic, not because of the economy or anything like that, but because they have a leverage position. Now, if you have a leverage position and you can't cut your position, or you're too late to cut your position, and your broker has called in and sold your shares, then you've lost money. Largely as an investor, it is very unlikely that you will lose money. Maybe the same shares won't make money. Maybe the Colgate and Procter and Gamble and Siemens and Castrol won't be the ones which will make money over the next 20 years or 30 years. But you'll have some other companies which will emerge to take their place. So what should you really be doing if you are an investor and you have invested in many companies, or you have invested in many funds? Make sure that your asset allocation is as per your liking. My liking is I can be 90% plus in equity and at all points in time, and I can move from equity to cash, which is just because I think some shares of mine are terribly overvalued. So I may just switch to equity, switch to cash, and then back to some other equity. Or I may sell some equity only because I have an opportunity to buy something else. Please understand, every share starts as a multi-bagger. You hope that it is a multi-bagger. So you buy the share and the share price goes up, then it is a multi-bagger. Say you bought a share at 6 rupees or 7 rupees. Now it is selling for 70 rupees. It's been a 10-bagger for you. You know now it is not going to be a multi-bagger. That's the stage when you say, okay, now it is going to be a compounder. So I again look for something which is at 7 rupees. And let's say you bought 1 lakh shares at 7 rupees. Now it's worth 70 lakhs. So you say, okay, now let me take 35 lakhs out and look for another multi-bagger, because I have the skill in finding multi-baggers. Really in life you don't need more than 2 or 3 multi-baggers. That is the evidence. But the desperation at which people check, because people have fear including FOMO, of saying, oh my god, he bought this and this doubled, this tripled, and I did not buy that. Now I have to look for the next multi-bagger. My friends bought HDFC and HDFC made money. Now I have to buy some share, some bank which is available at 9 rupees or 10 rupees, because that is going to be the next HDFC bank. No, there is evidence that HDFC bank will do well after some time, even though it has not done well in the last, say, 3 years or 4 years. Every company goes through that. Microsoft went through that, Reliance went through that. Every company will go through that. Or even if you take the share price of something like a Facebook or a Google or Amazon, the question to ask is, would you have been able to sit through the whole variations that happened, right? Price went up, price went down, the standard deviation is very high for all these companies. Would you have been able to sit through that? That's the question to ask. There is evidence that some of them will do well, and there is evidence that many of them will not do well. Now you have to ask yourself that question. If you were an original investor in Indigo, right, you bought the share at 10 rupees and you held on, then the company gave you some bonus, gave you some dividend, and then the company did an IPO, and today it is at 2,400. Would you have been able to sit from 10 rupees to 2,400? That is the question to ask. Find evidence of good behavior from your side. The market will do what it has to do. Or you say, oh, I have no capacity to find multi-baggers. I need good, decent compounders, and that I can do through a mutual fund. Then you invest in the mutual fund. You have a diversified portfolio, which could be a balance advantage fund. I mean, your portfolio should be like a balance advantage fund. No, I'm not saying you to specifically put money in a balance advantage fund, but understand, putting money in the balance advantage fund has the advantage of asset allocation being done by the fund manager, and the fund manager manager can be more clinical in his views than you can ever be. You can never be so clinical in thinking, okay, these rules have happened, I mean, I made these rules, so these changes have happened, therefore I should sell equity, I should buy debt, therefore I should sell debt and buy equity. A team of fund managers is likely to be far more disciplined. So look at the evidence. What has happened in the markets over a long period of time? Yes, of course, people have made money, people's standard of living has improved, the death rate has fallen, the safety of airlines has improved, right? Take 20, 30, 40 years and this is the evidence, it's staring at your face. Unfortunately, we get carried away by saying, oh my God, there is evidence that the market is going to go down. Maybe the market is going to go down, but if you are 32 years of age and you need the money when you're 62, market going down is a great opportunity for you to buy. I am not even saying get into small caps or get into mid caps. I am just talking about generally about investing. Thank you.